After peaking last July, the U.S. stock market has been on a downward trend and officially entered a bear market on January 31st this year. From January to March this year, we continuously reminded users on various online platforms that the market had entered a bear market. We aim to use big data analysis to provide predictions and risk management advice to investors, helping them navigate the vast sea of capital markets without losing direction. By using Risksoft Technologies' big data model, we analyzed semiconductor leading indicators and several key tech stock indices. We observed early on that the U.S. stock market had entered the weak third quadrant. We predict that the 8th economic downturn will last for 6 to 9 months. We recommend reducing exposure to U.S. equities until around Q3 or Q4 of 2025. Economic downturns have occurred 7 times in the past. The dot-com bubble, the SARS outbreak, the U.S. financial crisis, the European debt crisis, the A stock market crash, United States-China trade war, and the war and inflation. With a global population of 7 billion, capital flows drive an economic cycle every 3.5 to 4 years, much like the seasonal migration of animals on the African savanna. Whether it's Trump imposing high tariffs or the rise of the AI wave, these are merely supporting roles within the broader economic cycle. In 2020, we observed that the leading indicators were above 1, indicating that despite the pandemic, the economy continued to expand, like a high-speed train crushing mosquitoes, unstoppable despite external shocks. We discovered that semiconductors follow a cyclical leading pattern, which reveals that semiconductor delivery times lead global assets by 4 to 6 months, as they sit at the top of the tech industry chain. Because of their predictive power, we selected 6 key tech stock indices within the GAS framework as leading indicators: Semi-Leading Indicator, Semi-Index, PHLX Stocks, Nasdaq Composite Index, Taiwan Weighted Index, Taiwan OTC Index. We divide the fluctuations of the semiconductor leading indicator by those of the composite indices from 22 developed markets. If the result is less than 0, it signals that semiconductor fundamentals are deteriorating and entering a recession period. Thus, global economies may follow into a downward cycle. The core technology behind this is our global asset system. We integrate 7 major global assets into one comprehensive framework. Through this system, which is structured into 5 levels from macro to micro, we are able to observe the following categories of assets: Tech Index, Bond Index, Bitcoin, Excess Exchange Rates, Metal Index, Energy Index, Agricultural Index. In total, the system tracks 165 assets worth approximately $400 trillion, accounting for 88% of global market value. By consolidating these assets, we can monitor macro capital flows and predict economic cycles. Capital is like a reservoir. When opportunities arise, funds flow from the blue box into the red box for investment. When systemic risks occur, funds retreat from the red box back into the blue box for hedging. The same group moves in the same direction at the same time, causing markets to rise and fall together. Therefore, observing capital flows allows us to understand the overall economic cycle. Typical traders view the market from an ant's perspective, focusing on small, local fluctuations in economic data. In contrast, we take a satellite's perspective, observing global trends from a macro level. How do we track each asset's movement? We place a sensor on each asset, similar to how scientists place thermometers around the world to observe climate change. This allows us to observe the strength of each asset's momentum simultaneously and understand the opportunities and risks within that asset group. This technology removes noise from analog signals and converts them into digital signals by performing first derivative, second derivative, and third derivative, and combining short, medium, and long-term speed and acceleration calculations to determine slopes. We can gauge stock market momentum precisely. Applying this technology to markets enables us to detect early signs of asset shifts through big data analysis and foresee risks in advance. By understanding the logic of global asset system, you gain the ability to anticipate risks before they occur. Stay connected with Risksoft technology for timely and data-driven market insights.